Welcome to OBIC's Open Banking Insight Series. I'm your host, Michelle Beyo, CEO and founder of Finavator, as well as an OBIC board member. I'm really excited to be here today to share with you our new series in today's episode focused on venture capitalism and how open banking can help with the trajectory of growth while in Canada and looking to the UK. As we did research in advance of this series, what we found is that the UK has actually hit $6 billion in fintech investment in 2019. While they are almost double our population, in Canada, we have just hit 241 million. So there is definitely some room for growth, especially as you look at our GDP differential. We're actually $1 trillion less than the UK, which is punching above our weight. But we do feel that there is quite a bit of opportunity for Canada on a global scale. And as we start today's session, I'm really excited to intro our distinguished panelist as well as moderator. And I'm going to start with the pleasure of introducing the Honorable Senator Colin Deacon, an independent senator from Nova Scotia, who has a very unique background in being an entrepreneur, which brings different insights to how he sees the growth of Canada. And really excited to have him here today, as well as he has a vision of pushing consumer data rights forward and innovation. So thank you, Senator.
Thank you.
Also very excited to have two Canadian VCs represented in this panel. One is Jean-Christopher App, who is the founder of Holtz Accelerator, which helps accelerate deals in fintech startups and corporate clients and investors. He is also a fintech evangelist, passionate about improving society through finance and technology. Thank you for being here, John.
Great to be here.
I'm really excited to have Peggy Van de Plassche here, as I know her quite well, and she is the founder of Roar Ventures, which invests in Canadian data AI startups catering to financial services. Peggy is also a board member of Invest Canada, Front founder, and is an advisor to National Crowdfund Association of Canada, as well as Holtz. So very happy to have you here, Peggy.
Thank you so much, Michelle, for the invitation.
Yeah, and last but definitely not least, Michael Sims. We're excited to have you here to represent the UK. He is the Vice President of FinTech Investments at Fidelity International Strategics, who focuses on FinTech investments, and he's responsible for building, backing, and acquiring innovative, strategic financial services companies and technologies. We're really, really happy to have you here, Michael.
Pleasure to be here.
So I would like to start off today's session by having Senator Deacon talk a little bit about the importance of VCs when it comes to fintechs and how that affects the vision of open banking.
Thanks very much, Michelle. And I got to say that as a former startup entrepreneur, I love VCs. VCs are the lifeblood. They're the, when you can get a good VC involved in your business that has a good network, that has the size and scale that they can bring the mentorship, the advisory, and networking opportunities that allow you to, they really challenge you to achieve to your potential, not just an investor, not just money, but that advice to make sure that you're not making a mistake, that they've seen that mistake happen before and they're helping you avoid the problems and the potholes. So for me, this is really an essential conversation. It's also really important in Canada. We've been growing our investment community across the country. There's no question venture capital in Canada and angel investment in Canada has grown tremendously over the last decade. The sophistication has grown tremendously. But in terms of the opportunities that Canada has in the financial technology space, I'm of the opinion that we've really got to start to double down. And that comparison to the UK is a real wake-up call to me, that we have got to start to double down on making sure that we have the amount of investment available in this sector to support our best entrepreneurs to really grow dramatically. And we've seen some big wins in the last while. But if you think about the fact where most of the money's come from to grow Shopify, for example, or to grow ClearBank, a lot of that money, a lot of those companies have really relied on U.S. venture capital investors, and they start to become a U.S. company. You look at what's just happened with the huge success out east here with Verifin. Massive exit. That has got to be, we've got to grab that opportunity, and because that's saying to the world, hey, something big's happening in Canada. We better pay attention. Well, we've got to use that as a way to get more investment moving in this country. So that's this is why I'm really excited about this conversation. I'd like to start with Peggy, if I could, and then move to Jan. Just to talk a little bit about some of the insights into your role, the challenges that you're seeing as an investor in this very important sector in Canada, and what is the biggest opportunity that open banking brings to you as an investor? I mean, I'm certain certainty has got to be up there on the list, but Peggy, please give me some sense of that.
Thank you very much for putting me first. I like that. And maybe I should give a bit of context to the audience. So I'm from France. Please apologize my accent. And I've been very fortunate in the last 20 years in Canada to work at large Canadian banks, so Beyo, CIBC, large technology companies like CGI, and I've been advising large firms like Plassche, Omers, Oop, and I started a couple of fintech myself. So I've seen the good, the bad, and the ugly in every seat at the table. So I'm coming with maybe a bit of a differentiated perspective. So as Michel mentioned, I invest in early stage fintech in Canada mostly. I did some investments in the US. I like to invest in Canada simply because to be able to help the entrepreneur, I think it's easier being in a market I know very well. Which is a bit back to what you are mentioning with value creation and bringing that differentiated help to the entrepreneurs to be successful. We have great opportunities in Canada. We have a deep expertise in financial services. I'm based in Toronto. I was in Montreal for many years before that. The expertise we have in financial services give us the opportunity to start companies knowing exactly what is needed in the marketplace. That is a big differentiator. You don't have that. UK, obviously, with London and this expertise has that, but you don't have that in many countries, that financial service expertise. So that's some of the opportunities I see. Obviously, the tax credit and the support that the government is giving through SHRED is a huge opportunity for entrepreneurs to also start and sustain a business, because cash is king, you know, and this tax credit really helps a lot of entrepreneurs getting going. And I see you want to say something. Go ahead.
No, I'm with you entirely. SHRED is a very important competitive advantage in this country, and that needs to be protected if we want to protect our innovation sector. Jen, what about you? Give me some sense about Holt Accelerator and where the challenges are that you're facing, and where the opportunities lie from as it relates to open banking in Canada.
Would love to, and thanks so much for inviting me here today. It's a great honor to be here on the panel with such great speakers, and yourself, Senator Colin Deacon. Really appreciate all the work that you're doing in the innovation space, which is super important right now. I think we need more champions on the inside helping to push us forward. I do want to say first and foremost that Canada, I really do believe, has the ingredients to be a global leader. Undoubtedly, and it has to do with the fact that the quality of life is fantastic, education is phenomenal, ease of establishing a business, the stability of our financial ecosystem, although in some cases maybe we're too stable, too conservative, which we can get to in a second. But that said, I will say that those create a fantastic environment, and we've proven multiple times now that we can build unicorns that can take on the world. So it's been there. It's a big, and that was the question. Do we have a big enough market to actually build from? That said, what are we still missing? And I think the crux of everything, the one message, if I can just get across one thing, is that we need to start optimizing for competition. Like everything that we do, we need to create a more competitive ecosystem. And so we see this in many aspects from the seed stage investing world. Let's dive into that. There's a lack of seed stage investors. There's not enough of them. So as you already mentioned to before, yes, while international capital, foreign direct investment is good, do we need that much? Why don't we have enough investors? Why, if we also, that trickles all the way up. If we look at the seed stage for us, as if you're raising a fund, there's a lack of LPs around the table. And there's issues around liquidity requirements, for instance, from the corporate side for banks to put money in. So currently the sort of potential rulings that could come, and depending on how we look at it, is for every $1 you invest, you need to set aside $1. In the banking world, that economics doesn't make a lot of sense. In previous times, we fostered investment from the financial institutions by our banking side and from the Department of Finance, unlocking some of these restrictions here. So we need to look into doing that. Why this is important a lot of the ways is that each time when any of our ecosystem, Canada sometimes is kind of torn between, okay, does it just happen naturally through industry like we see in the US? Or do we follow more of what we kind of see with our European counterparts? And I will say that we tend to be a little bit more European in many ways, of this just the size of our nature and the way that potentially we should be looking to do. And we've done this. We have a track record of helping industry start through government, then get passed on. Telecommunications networks, the VC industry, inspired out of Israel, what became into Canada, into what is, and this other aspects. There's other areas which I'm trying to push for, open banking, where we need more government intervention to be able to push this forward. We are in inning two of open banking. That's a huge issue right now. The UK is certainly miles ahead, at least 5 years ahead of us. And a time where it takes $1 billion to make a unicorn, that's a big gap. At what point are we moving too slowly and we're passing up opportunities and we're reliant on international bodies to better serve our local ecosystem versus building it at home, which we know we can do. So I think, for me, a big piece of this is how do we better foster an ecosystem, a more competitive ecosystem, one for which the end user has better selection of the products and services, more choice, and doing for them to have that. That means we have to create a world where more fintechs can get access to the data that they require. Data is gold, and the accessibility to that data is super important right now. We're only in, you see what's happening in the US with antitrust rules that are occurring with the social media giants. You see what's happening with open banking. We need to start moving on this and passing legislation to open it up, to give it access to more control over the user, to the end users. Otherwise, we're just going to fall further behind, and the further behind is going to be very detrimental to our competitive stance.
And I love the perspective that we've got to have that in the wavelength of investment from seed stage right through to later growth stages, because at each step we need to be able to support the growth of these enterprises. At the far end, what Jan said is unicorns, and Michael, in Canada we call them narwhals. So it's but Michael, can you talk about it from the perspective of the UK? Where you've clearly you're a corporate investor, you're American-backed, Fidelity's American company, and you're a corporate investor in the UK market. So you've got a different perspective again. And how has the certainty around the open banking framework in the UK changed how you've been investing? Clearly, it's brought in far more investment overall, but just give us a perspective from your standpoint.
Sure. Well, first, thanks for having me. Pleasure to be here. I'll maybe just start for those that are less familiar with Fidelity. Fidelity International provides investment solutions and retirement expertise to institutions, individuals, and their advisors. They're responsible for around 565 billion of assets across 2.5 million clients, and we're present across Asia, Europe, Middle East, South America, and here in Canada. So very much the corporate has that footprint and that weight behind it. I work within the strategic ventures arm, where we make VC investments into fintech businesses that are really shaping the future of asset management. And we invest into new emerging technologies that can either create new markets, enhance portfolio returns, or disrupt existing processes. Over the last few years, we've invested and deployed around $70 million of capital into 10 portfolio companies, and invested alongside the likes of OMERS and Portage in Canada. We typically invested at a slightly later stage than Jan, so around Series A and B initially, and have a global remit with companies from Winnipeg to Singapore. In terms of how we look at open banking, I've kept tabs on this very keenly over the last few years. And actually what I'm most excited about in terms of open banking has very little to do with transactional banking at all. It's more around the trend towards opening up a broader finance, whereby it becomes easier for a consumer to access and aggregate all their financial data and build a picture of their own financial health. I think the impact of this can have a huge impact on financial engagement and education, and that can be transformational. I think open banking effectively levels the playing field and facilitates a bit of an unbundling of financial services that would have been quite difficult to do without accurate access to end customer data granted by that end customer. And when I look at kind of things that excite me in this space, I tend to look at it through that lens of savings and investments. So, for instance, if I can accurately play back a customer's income and expenditure over time, suddenly you can begin to build a picture of how much they can afford to save and invest. And this is data that even in the UK, financial advisors don't have access to that real data. You're sort of based on heuristics and interviews with that customer.
I really like the focus you have, and I think all of you have, and so I'd just like maybe just each of you to speak to it for a second. This is all about creating value for customers. The more value we can create for customers, the more exciting that business opportunity is for you as an investor. And so the certainty that open banking provides from a regulatory standpoint, so that you know that your investment is safe. I mean, nobody wants to be investing in a business that is not living up to strong regulatory standards, because that will leave you with uncertainty as an investor. So just speak about how that drives the investment process for you. Peggy, would you mind starting off and just the need for a good regulatory regime that protects customers and makes sure that your investment then is protected?
Yeah, well, and you're absolutely right. As a general rule, investors hate uncertainty, whether it's public or private markets. And what does it mean in the VC and the Canadian VC ecosystem when you invest in fintech is that you deploy way less capital in these firms because, well, to your point, you don't want to take that type of risk, but there is a cycle that starts from that, which means you're going to have less wealth creation because these founders that would have started the next narwhal or unicorn don't exist. We haven't created these jobs. We haven't got this tax revenue because, so there is a huge implication on open banking. And I'm looking at it from a VC perspective, from a client perspective. That means less choice. That means higher fees. That means, to go back on what Michael was mentioning, the idea of making better decisions for their financial lives, not having this opportunity because everything is very scattered. So there are a lot of implications. Again, we can discuss a bit later on, what type of framework we need to put around data privacy, data security, because that doesn't mean it's a free-for-all. And I think, Michael, in the UK, it's absolutely not a free-for-all. So there has been, I think, in Canada, a bit this stick that has been used that open banking is going to open the can of worm, and it's going to be very dangerous because data is not going to be protected and da-da-da-da-da. But with a good framework, you can have both. You can have security, clients being happy, and investors investing, creating wealth for the entire ecosystem. And
it's that cycle that you see is driven by regulatory certainty.
Exactly.
Drives a cycle of investment. And clearly right now, Canada is way behind in that cycle of investment, relatively speaking. Jan, you spoke about the importance of competition. And I couldn't agree more with you. It's a big driver of productivity growth, and productivity growth is a determinant of prosperity. So we've got to worry about that. So how do you see open banking creating more investment opportunities for you by creating more certainty, more competition?
As mentioned already, I think Michael said the idea of leveling the playing field. So the ability for fintechs and new players to have access to the data to better provide products and services ultimately to the end user. So that helps to create more competition in the space. I do want to flip on and talk a little bit about the regulation side. I think we do need to find a way to get this moving a little bit. I think there's been some challenges when we talk about, yes, we can offer better products and services, a more holistic approach, much like Michael was saying. And I 100% agree with that, right? This full dashboard, more comprehensive, more value to the customer. But here's the other side. The more information that in some cases, what can be the concern that you give to one party. So this one information is too much power, can make better choices and influence you. And we know this, we've all been watching all the social media, Netflix series that are popping up right now. And there's a lot of truth to this. The importance that I'm trying to bring out here in this is that it needs to be navigated obviously carefully, but at the same time, because we're falling behind, we're not learning how to structure something, putting something forward, testing it, and then building off of it. The UK is well advanced right now in other nations, Singapore, across Europe, et cetera, and already putting forth this and learning. We're now trying to look at what they did, and it's great because then we can build off of and say, hey, was it truly competitive enough? Did it really work that way? But the further we fall behind, then the harder it's going to be for us to recover and build an infrastructure for which we can build more better competing products. Just one last point is we've passed on investments that were based in the UK because they were building on open banking rails. We've struggled to be able to support them or bring them in. Where we said, hey, maybe we'll look at you in what, another this was about a year ago, so another 4 years until we actually have a deadline for when we have open banking open up. Well, at that point, hey, like we said, it takes a year to build $1 billion unicorn. Well, that's too late for us to invest and help them come in and build and establish themselves in Canada, like we've seen through our investment structure, where they've incorporated, in some cases, even headquarter. So we're not even building the proper rails sufficient to build a more competitive ecosystem.
So many different elements in that, but the reality is, what I like most about what you said is, unless we have things developing in the economy, we are not developing the customer base, the user base, the partners, the regulatory reforms. It's a cycle within the economy that is essential to building this industry that it can compete globally. So, Michael, you've had that in place for a few years in the UK, and I loved just when you spoke about the personal financial management type investments. I heard a phrase the other day: just-in-time learning of the financial issues that most people spend more time choosing a flight while pre-COVID than they did and deciding on what we're going to pay for a flight than they would in booking a mortgage. And it's, the financial impact of the two of those things are quite different in terms of what it means to their after-tax income. But just speak to me about how you've had a framework in place in the UK, but you've mentioned that you've got global investments that you've made out of the UK. How is it how has that helped you really develop a very strong portfolio with the 70 million you've deployed so far? That cycle of certainty that at least exists in the UK and is building up that user engagement.
Yeah, look, I think undoubtedly having a regulatory regime over the last few years, which has signposted when open banking was coming in, has kind of concentrated minds, both in terms of companies looking to exploit that regulatory change, effectively take advantage of the opportunities that come by through this opening up of data. So the first bit is, the first piece to appreciate is, open banking effectively releases a transactional data set that's been undervalued by the banks, and it allows any regulated fintech to come in and build a service on top of that. I think the second piece around the regulation that is important is that it puts in place a broad set of standardization. So if you're a fintech, you know that you can get an API from this bank, and you can get whole market coverage rather than relying on, you know, the goodwill of certain banks that are maybe a little more forward thinking. And that when you're trying to put in place a direct to consumer product, that's vital. You need to be able to access the whole market. And then thirdly, I think, you know, having a clear time frame for adoption and, you know, mandating the banks to stand up these APIs by certain periods. Now, in the UK, those were delayed, but at least the direction of travel was set up. And, you know, we started with effectively a minimum viable product here in the UK. And when it first launched, I think open banking was pretty underwhelming, and a lot of fintechs were quite frustrated about the quality of those APIs. But you have to get going to build that feedback loop. And, you know, over the last 12 months, I'd say, you know, the stability of the APIs across the board has improved markedly, and you've seen that actually in usage. So I think over the last 6 months, some of the stats in the UK is you've gone from about 1 million users of open banking facilitated products up to 2 million in the last 6 months. So we're seeing, you know, we've got that stability, that bedrock, that means that people can begin to build on top of those foundations.
It's amazing to think about how Canada already has an estimated 4 million users, but all using screen scraping at this point in time, which has risks associated with it. But what I'm hoping is Canada can jump over top of that frustrating period that you spoke about and go right to having the API frameworks that deliver the value that the customers are looking for, and that's the key. Customers this is all about delivering value to customers, not necessarily who controls data. The one group, and certainly our new Bill C-11 in Canada, which is about the Consumer Privacy Protection Act, is focused on data portability. Jen, I want to speak, if you could for a second, about looking at read and write access. And how important that is. We've got the need to certainly move very quickly to start to catch up and take advantage of the lessons learned in other countries, but also to not maybe stop halfway with just read access, but able to establish write access as well. So what are your thoughts on that from an investment standpoint?
I think big picture, there is a lot of different gates that we need to start unlocking from the financial regulatory side. So read and write access, or streamlining our different provincial regulations into one, ability to access banking license, you know, a better decision on how we're looking at central bank digital currencies, et cetera. So it kind of falls into each one of those slows our ability to, you know, develop better products in this, or learn from it and build off of it. One thing we were mentioning here, and I totally agree. I think at the core, it's protecting data rights in a way that maximizes competition, right? So that, let's never forget, we're there for the end user, but we need to maximize, because competition is great. Like it just creates better products and options for the end user. So I'd say, and another piece that I was hearing in this is like a stability of the regulatory environment. Now, what does that mean? Because regulations need to be progressive. We need to evolve. We need to adapt, right? And for us to stay stable and conservative, like that's what's trying to bring up, the point here is at what point are we moving too slow, and that we're actually hurting and putting our own consumer and our economy at risk because we're not moving fast enough. And the reason I'm bringing up all these ideas at the same time is that each one of these is hurting the ability for us to understand how to regulate and create mechanisms, while as other nations do that to move more quickly. We need almost a more flexible regulatory environment. There is indication that the OSC is, for instance, moving a little bit towards that, right? The Ontario Securities Commission, so that they can have a more competitive mandate. And we've seen that in the way that, you know, they're offering sandboxes and GFIN, right, for them to, they're almost like a VC. They're not supposed to be, but picking companies for which they will allow them to play in a protective environment. There is a selection period, right? Everyone's kind of picking out and choosing. Now, okay, it depends on how they'll frame it differently accordingly, but should we be giving them more power to enable this and move and even adopt technologies? I see it all the time with the AMF. They're incorporating and playing with the technologies themselves. Our government needs to do a better job of incorporating local fintechs as well into their own processes. I think there's a huge amount of capital available to build a competitive ecosystem through that piece. So I think there's, for me, it's just how can we unlock multiple these gates? It just slows them down each time. You know, in Europe, we see things, they have IBAN, right? Yeah, that enables others like to get banking. Like our fintechs we've seen them pivot and offer wallets that to have new customer acquisition channels and essentially almost turn them into a form of a bank, right? This just gets them more options, more ability to grow versus what's happening here in Canada, where we're just late on a lot of these decisions right now.
Well, and I think we're hindered. We've got an anchor that we're dragging, which is so many our fractured financial regulatory system in this country is like so many elements of, you know, we restrict interprovincial trade. We've got all these trade agreements all over the world, but we don't have trade agreements in our country within our borders. And this is a great opportunity to perhaps start to address one of those. But I know that my grandfather was a stockbroker in the 1920s, and that was an objective then. So we've been a while working on that issue. If I could, Peggy, just to move to you, just to think about open banking services and the ecosystem partners in that. What are the key pillars that you see us needing to focus on as we move towards establishing open banking or open finance in Canada, consumer-directed finance in Canada? What are the key pillars that you want to make sure we've got covered off? I mean, one of the things that keeps coming up in this conversation is global interoperability. You know, because if we've got an environment that enables companies to really grow from Canada and excel anywhere in the world, that's a competitive advantage. But I'd love to hear it from your standpoint.
Yeah, no, you're absolutely right. You know, like the global perspective, again, I'm an immigrant, you know, like Canada is a country of immigrants, not going to go anywhere. So we're coming with, you know, people who are coming from Asia. They also want to have the same ease of dealing with financials than they had at home. When I moved here 20 years ago, it was a total nightmare to send money to my family in France. It was costing me an arm and a leg, you know. Now, thanks to a lot of this, you know, non-bank organizations, it's extremely easy and it's extremely cheap. So the global aspect is important because the world is not going less global, even if we're talking about, you know, relocalization of supply chain with COVID, you know, we're too already imbricated within each other to move back from that. The second thing that I mentioned a bit earlier was, again, cybersecurity. That's something I'm personally very passionate about, even if it's maybe not a sexy topic. It's something we need to be very mindful of. During the COVID crisis, there has been a tremendous rise of cyber attacks towards banks globally. And some of these attacks are actually bankrolled by rogue nations. And that finances terrorism, that finances, you know, arms dealers, drug dealers. So we need to think about, you know, what are the real life implications. When you're talking about open banking, one of the things that is very important for me that we haven't really mentioned is the opportunity for vulnerable populations to have access to products and financial solutions that today they don't have. And when you are in a crisis like we've had right now, where you cannot pay cash, everything is closed, you don't have a bank account, what do you do? So there is also a social aspect that
absolutely. Sorry, I didn't mean to interrupt you, Peggy. No, I couldn't agree with you more, though. And that's crucial. And what's great is, as an investor, you're just as excited about that as anybody, because it opens up new market opportunities. It opens up new ways to deliver value through an investment that you may be making. Michael, I wouldn't mind if I could just start to finish off, and then we'll ask Peggy and Jan for final comments. But in your final comments, could you speak to what Canada should do if it's going to attract organizations like yours to invest more heavily in Canadian enterprises, Canadian FinTech enterprises? What will have happened that causes that to occur. That has you flying from London to Toronto and Montreal and Halifax and St. John's, Newfoundland, and out west to invest in our fintechs because you're so excited?
Look, I think a lot of the building blocks are already there. Canada has great schools. You have great computer science professionals coming up. So it's an incredible breeding ground, I think, for good fintechs. I think actually Canada has a great, in terms of courting external investment and setting up the Canadian division of startups. We certainly have one in our wider portfolio company that was looking for a North America hub, and Toronto won hands down. So I think that's one element to continue doing what you're doing. In terms of companies that would be more attractive or elements that be attractive to us, certainly I look at it through this corporate lens. So the geographies that we're targeting are Canada and largely Europe and Asia. So ones with a mindset of actually looking east rather than maybe just focusing purely on starting in Canada and going into the US. It's not a market that I personally invest in, but it makes sense for a lot of Canadian companies, just given the size of the market. I think, interestingly, though, given that you can incubate something in Canada, and if you build it with a mindset of being multi-currency, multilingual, which you naturally have, and multi-jurisdictional, you can maybe pick off more Canada-sized countries, and that can often be easier than trying to go into a large homogenous market where there are very well-funded competitors that are ready to mimic your product very quickly. So it might be a strategic piece just from an entrepreneur's perspective to go, where do I stand the greatest chance of success? Is it Canada, US, or do I go Canada and try and pick off countries in Europe or elsewhere?
Michael, that was just a great piece for our fintechs to be listening to, and also to our public policy officials and parliamentarians to be listening to, because we have so much of what's already there, and it's just a matter of focusing, and we could become a world-leading destination for sophisticated investment in this space. Jan, could you just give me your sense of your last comments and last things you want to make sure that we emphasize that we haven't talked about in this session, and as we wrap up?
I appreciate the time here today to have a conversation here. I think how can we move forward? Like it's been well said, we have a lot of the ingredients in place. So how can we unlock this and focus so that we can move forward? We're a very smart nation. We can figure this out, but we need to start moving here a little bit more quickly here. I think if we look at how we do, like if I take the example of corporate innovation into government, the best corporates, it's from the top down. So we need those at the top of the chain understanding how important this is. As Peggy talked about cyber, we're at war. There's cyber wars, and our data rights and open banking and all these issues are super intertwined. Now, I don't want to slow the process and say they're all intertwined, let's start, but we should be heavily pushing forward in all these areas. And then at some point saying, like, let's get someone who understands it properly and give them this group of people to operate with direct paths to the top to push forward. We saw that in the UK. We see that in corporate innovation whenever you want to actually innovate, so that they have freedom to operate and get things. And there's a bunch of things from open banking to LP investments, better unlocking it, improving the liquidity situations for financial institutions to be able to participate. Central bank digital currencies, we were world leading, way ahead of the curve, 10 years, Project Jasper. We've kind of decided to be a follower. I would not say fast follower. We gave it, and I'm okay with the collaborative approach of sharing with other banks to explore how to do it. But to me, it's what Canada's doing what it does best. This phenomenal research gets stuck in the commercialization. We cannot be afraid to take nothing ventured, nothing gained. Let's take some risks here. Let's get some of this stuff moving.
Couldn't agree more. We've got a great research engine, but we still are building our transmission to turn that into forward motion in the economy. And it's been a perpetual issue. But what I also heard from what you said is that open banking and investing in fintechs is a way to address a whole lot of other priorities in the economy. If you focus on what's needed to do this right, a whole lot of other benefits spin out into other aspects of the economy. Peggy, last word, and I'm going to hand it back to Michelle after you're done. Thank you.
Thank you very much. Two ideas I want to leave you with. The first is that we're leaving a lot of money on the table as a country by not having a framework already defined. And that we discussed about that cycle, there is a lot of wealth that is not created for Canadians because of that flip-flopping on the issue. The second is also we're cheating our clients by not giving them the best choices, the best fees. And that again is not a service to Canadians. So I would say that it's above and beyond financial services industry. This is a Canadian challenge in terms of value and creation of wealth, but also in terms of making sure Canadians are free with their financials and are wealthy. So it's very, very important issue to solve, actually.
Peggy, thank you very much. As a final note, I think that's really important, that we're leaving money on the table globally, and this is not a time, the COVID era, the COVID recession is not a time where we can afford to do that. And this is all within our control. Not acting here is a choice to slow down our ability to recover. So thanks very much to Jan and Michael as well. Peggy, thanks very much. Really enjoyed your insights. And Michelle, back to you.
Thank you, Senator. This was such a great session and so important as we look to talk about fintechs and their growth from all different stages. I think the VC discussion is so important, especially as Canada is making some of the right steps forward to move into this space by having even DIEC start doing testing from their trust framework, having the second consultation, and to Senator's point, also having the new data consumer rights being presented. I think just as one last word, if each of you can share with us, now that we're in consultation, what is that, if you're not part of those 5-day consultations, what is something that you want mentioned to that group that is trying to drive this mission forward? And I'm going to start with Michael, just from a UK perspective, back to Colin's question, what is that one thing Canada has to do right?
Look, I think it's been mentioned a couple of times, you're already doing the whole screen scraping thing. There's mass adoption there. And so for me, it's a no-brainer to move to open banking because it's far more secure. You're not asking a customer to place their username and password with a third party to access whatever within the bank account. You're passing tokens through APIs, which is just far, far more secure. And like we mentioned slightly earlier, from a venture perspective, that's a business model that has far less regulatory risk, far less reputational risk, and far less data privacy risk.
Yeah, thank you. I truly agree. Peggy?
That would be more in terms of mindset, to be led with the idea of being bold, of being, looking for opportunities versus looking at the risks and playing small. That's really what I would like to infuse in these 5 days, being daring.
Yeah, think big. I love that too. I so see Canada as a global player in the future, and to do so, I think you're so right, Peggy. We've got to think big. And Jean, I give you the last word.
It's tough to top, especially that one, because I do think we need to be more daring and bold. But I will say 2 quick things. Firstly is we're big proponents of diversity. And so making sure there's diverse opinions around the table, making sure proper representation, making sure the fintechs I know sometimes are very overlooked in the discussions are even the smaller ones, not just necessarily the unicorns that are there or have representation and a voice and that of our people. Like it's a tough to get their opinions on this subject because it is a little bit more tricky. So we need to find a way to get them around the table. And lastly, I'd say just pick a date. Let's just get a date. Let's work backwards. Let's get it done.
I love
it.
that last comment. Yeah, agree. Let's pick a date. So thank you so much for all of your incredible insights today. I'm so happy we got to talk to VCs, and I look forward to the flourishing future of Canada in this space. Thank you, Senator Deacon, for being a part of this as a moderator. And thank you, Peggy and John and Michael today.
Thank you so much. Thank you.
Thank you, everybody.